Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Pilgrims Pride CORP quarterly report. Pilgrims Pride Corporation offers a diverse range of businesses and services, including production and distribution of fresh, frozen, and value-added chicken and pork products, fresh products, whole or cut-up chicken, selected chicken parts, primary pork cuts, added value pork, lamb products, and more prepared products. Fully cooked, ready-to-cook, individually frozen chicken parts, strips, nuggets, patties, sausages, bacon, smoked meat, gammon joints, pre-packed meats, sandwich and deli counter meats, and meatballs, plant-based protein, ready-to-eat meals, multi-protein frozen foods, vegetarian foods, and desserts, exported products. Whole chickens, chicken parts, primary pork cuts, hog heads, trotters, and more brand offerings under Pilgrims. Just Bear, Golden Pump, Gold Kissed, County Pride, Pierce Chicken, Pilgrims Mexico, Savoro, Torrico's, Del Dia. Moy Park, O'Kane, Richmond, Fridge Raiders, and Denny brands services to chain restaurants, food processors, broadline distributors, retail market, grocery store chains, wholesale clubs, and other retail distributors. Pilgrims Pride Corp stock price drop. A year of challenges. The past year has been a tumultuous one for Pilgrims Pride Corporation, PPC, as its stock price plummeted by over -10.36%. Several key factors contributed to this decline, including analyst downgrades and price target reductions from reputable institutions such as BMO Capital and Goldman Sachs. Despite beating earnings expectations in Q3 2025, the company's stock still dropped due to investor concerns about future guidance and market conditions. The forecast for Pilgrims Pride is bleak, with projected earnings declines of over 11% annually over the next 3 years. Profit margins are expected to decrease from 6.8% to 4.6%, primarily due to rising labor costs and volatile input expenses. The company's underperformance against both the S&P 500 index and the consumer staples sector has also weighed on its stock price. The combination of these factors has led to Pilgrims Pride hitting new 52-week lows, reflecting a challenging period for the company. As investors continue to reassess their expectations, it remains to be seen whether the company can recover from this decline and regain investor confidence. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the expansion into new markets, increase in contract growers supplying chicken for operations, and growth in prepared products. Additionally, favorable market pricing and a strengthening Mexican peso have contributed to revenue growth. In contrast, revenue decline is largely attributed to a decrease in prepared segment revenue, particularly in Europe, where revenue declined by 15.1% in the 3 months ended September 28, 2025. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2025 and YTD 2025. Initially, net income decreased by $6,929 in Q3 2025, indicating a decline in profitability. However, this trend reversed in the year-to-date YTD period, with an increase of $143,962. Profit margins also experienced fluctuations. The gross profit margin dropped from 15% to 13.8% in Q3 2025, but rose to 13.9% in YTD 2025. Similarly, the operating income margin decreased from 11.2% to 10.3% in Q3 2025, but increased to 10% in YTD 2025. The reasons behind these changes are multifaceted and may be attributed to various factors such as increased competition or operational inefficiencies, contributing to the decline in net income and profit margins in Q3 2025. Conversely, improved operational efficiency or favorable market conditions could have led to the increase in net income and profit margins in YTD 2025. Overall, these changes suggest that the company is adapting to its environment and making adjustments to improve its financial performance over time. The company is indeed generating positive operating cash flow. The financial summary highlights 3 key points that confirm this trend. In the 9 months ended September 28, 2025, the company generated $1.1 billion in cash provided by operating activities. As of September 28, 2025, the company had already accumulated $1,080,440 in cash from operating activities. The summary consistently reports a positive figure for cash provided by operating activities, indicating a strong and consistent trend. These figures demonstrate that the company is successfully generating sufficient cash to meet its operational needs, resulting in a positive operating cash flow. The company's debt level has undergone significant changes over the past year. The most notable increases include a rise in accounts payable by 37% from $152.8 million to $210.1 million, and a substantial jump in U.S. credit facility from $0 to $850 million. On the other hand, the debt level increased by $7,079,000 from December 29, 2024 to September 28, 2025. Regarding interest expenses, there is conflicting information. However, some notable changes include a decrease in interest expense from $41,597 to $38,157, and an increase of $9.5 million, 49.2%, from $19.5 million to $29 million. The net interest expense also increased by $11.5 million, 17.6%, from $65.7 million to $77.2 million. Overall, the company's debt level has increased significantly, while interest expenses have shown mixed results with some increases and a notable decrease. The company's financial performance varied across different regions and segments. Notably, Europe and Mexico demonstrated strong growth, with a 6.4% and 5.3% increase in net sales respectively. In contrast, the UK experienced a decline in pig production by 1.3%, while the US saw only a modest 2.3% increase in net sales, accompanied by a decrease in sales price per pound. Management's outlook on company strategy. The company is actively managing its debt by implementing a bond repurchase program and increasing borrowing capacity. Despite potential risks from legal proceedings, changes in law or tax laws, and fluctuating commodity prices, management remains confident in the company's financial stability. With sufficient liquidity to fund current obligations for at least 12 months, including a new prepared foods facility construction project, the company is poised for growth and expansion. The company has a history of returning value to its shareholders through both dividends and share buybacks. In 2025, it declared and paid special cash dividends of $6.30 per share in March and $2.10 per share in July. Additionally, the company utilized its bond repurchase program to repurchase shares, demonstrating its commitment to maximizing shareholder value. Concerns about inventory buildup or supply chain disruption are evident throughout the financial summary. Inventory buildup is a significant concern, with estimates made by the company including reserves related to inventory obsolescence or valuation, page 15. The company has also acknowledged building inventories to meet increased demand and seasonal fluctuations, page 56, which may lead to excess stockpiling. Furthermore, cold storage inventories rose by 4.3% in August due to an oversupply of breast meat and wing stocks, page 46, indicating potential for inventory buildup. Additionally, feed ingredient inventory increased by $13,636 due to a hypothetical 10% increase in feed ingredient prices, page 59. Supply chain disruption concerns are also present, with accounts payable to related parties increasing significantly, page 37. Avian influenza outbreaks have constrained imports from the EU, but alternative sources such as Brazil and Ukraine have helped offset the shortfall, page 46. Disruptions in international markets and distribution channels for various reasons are also mentioned, page 61. These concerns highlight potential risks to the company's operations, including inventory management and supply chain resilience. That concludes the financial summary for Pilgrims Pride Corp. Feel free to comment below, and I will be happy to answer them when possible.